Welcome back to our YouTube channel, The Book Digest. In today's episode, we're diving into a powerful and practical summary of One Up on Wall Street by Peter Lynch. We're about to explore an idea that completely turns conventional investment wisdom on its head. So get ready, because you're about to find out why what you see in your everyday life might just be way more valuable than some analyst's complicated spreadsheet on Wall Street. So what if I told you that you, yes, you, as a regular, everyday investor, actually have a built-in advantage over the slick professionals on Wall Street? I know, it sounds totally backward, right? But that is the core idea from Peter Lynch, who happens to be one of the most successful investors of all time. And this isn't just some feel-good theory, he's literally sharing the playbook that made him an absolute legend. And, why should we even listen to this guy? Well, this number right here pretty much says it all. From 1977 all the way to 1990, the fund he managed, the Fidelity Magellan Fund, pulled in an average annual return of 29%. 29%! That made it, hands down, the best performing mutual fund in the entire world. So yeah, when he talks, we should probably listen. Okay, so what is this amateur's advantage he's talking about? Well, think of it like this. Professional investors, the big funds, they're like giant cruise ships. They're massive, they're slow, and they can only sail in really deep waters, meaning they're stuck buying huge, well-known companies. But you're like a nimble little speedboat. You're free to explore all the hidden coves and find those treasures, those small, amazing companies, long before they ever show up on Wall Street's radar. But hold on, before you start zipping around hunting for the next big thing, Lynch has a really important checklist. He wants to make sure that you're not just financially ready, but also, psychologically ready for what can be a real roller coaster ride in the market. And it all comes down to 3 simple but super important questions you have to ask yourself. First up, do you own a home? Now, Lynch isn't saying a house is some great investment that's going to beat the market. No, that's not the point. He sees it as a foundation, a base of stability. Owning your home gives you that solid ground you need so you can invest in stocks without the pressure of, say, needing that cash at the worst possible time. It's all about stability first. The second question is a big one. Do I need this money anytime soon? You got to think of the stock market like an oven, not a microwave. This is not the place for your emergency fund or the money you're saving for a down payment next year. Lynch is really firm on this. You need a 5-year minimum time frame. That gives your investments the time they need to cook, to rise, and to ride out all the inevitable ups and downs. And third, this is the real gut check. Do you have the stomach for it? Seriously. Can you watch your portfolio drop 20%, or even more, without completely freaking out and hitting the sell button? Lynch is super blunt about this. If your instinct is sell when things get scary, the stock market is probably not the place for you. Because that one emotional decision, panic selling, is the #1 destroyer of wealth for individual investors, period. All right, so if you pass that 3-question test, you're ready to get into the heart of Lynch's strategy, and that is his 6 categories of stocks. See, this isn't just about what a company makes or sells. It's about understanding its personality, how it's going to behave as an investment. This is your toolkit. First, we have the slow growers. Think of these as the reliable old oak trees in your portfolio. They're huge, mature, established companies, maybe like a big utility company. They're not going to give you crazy growth, but they're great for stability and often pay out some nice, steady dividends. Next up, the stalwarts. These are your blue-chip champions, the household names you know and love. Think Coca-Cola. They're growing at a pretty good clip, maybe 10 to 12% a year. They're solid, all-weather players. But here's Lynch's advice. Don't get too attached. The strategy here is to buy them at a fair price, and once you have a 30 to 50% gain, it's probably time to sell and move on. And now we get to Lynch's absolute favorite playground, the fast growers. These are the small, aggressive, nimble upstarts, the disruptors. They're growing at a blistering pace, like 20 to 25% a year. This right here is where you find the rocket ships, the companies that can launch your entire portfolio into a completely different orbit. This is where you hunt for the 10-bagger. That's a term Lynch himself came up with. It just means a stock that goes up 10 times what you originally paid for it. Finding just one of these can be an absolute game changer for your financial future. Okay, next we have the cyclicals. And this is where your gut instinct can totally lead you astray. We're talking about companies like airlines, car companies, steel companies, things that move with the economy. The time to buy them is when things look absolutely terrible, when the economy is in a slump and everyone's pessimistic. And the time to sell? It's when the headlines are glowing and everything looks fantastic. It's the exact opposite of what feels right. Then you've got the turnarounds. These are companies that are in deep, deep trouble, maybe even on the brink of disaster. They're definitely high risk, but they can be high reward. Now, Lynch has a golden rule here, and it's non-negotiable. You have to check the balance sheet. If they have low debt, they've got a fighting chance. But if they're loaded with debt, that could be a death sentence. And finally, we have the asset plays. These are like the treasure hunts of the stock market. You're looking for companies where the stock price is way below the actual value of the assets they own. Maybe it's hidden prime real estate or a huge pile of cash or some valuable patents. Your job is to be the detective and uncover that hidden treasure. So there you have it, Lynch's 6 stock personalities. You've got everything from the steady, reliable slow growers to the explosive fast growers, and each one has its own unique playbook. The most important thing is to know which game you're playing before you put a single dollar into a stock. Now, just putting a stock into a category, that's only the first step. Next, and this is maybe the most important part, you need to understand its story. What is the actual narrative that's going to make this business worth more in the future? A good story isn't just wishful thinking. It's a clear, simple hypothesis that you can actually check on. For example, a restaurant chain that has a solid plan to expand from 15 stores to 150 stores, that's a story. And this story becomes your North Star. If the stock price takes a hit, but the story is still intact, they're still opening new stores, people still love the food, then it's a buying opportunity. But if that story starts to fall apart, it's time to sell, no matter what the price is. So how do you know if your story is any good? Well, Lynch has this brilliant, simple test he calls the 2-minute monologue. Can you explain to someone in less than 2 minutes why you own a stock, what category it's in, and what would make you sell it? If you can't do that, you're not really investing. You're just gambling on a hunch. And this brings us right back to where we started, your unique edge as an amateur. You really don't need a fancy MBA or some secret inside information. Your greatest asset is your own curiosity and your connection to the real world around you. Seriously, your edge is everywhere. It's that new coffee shop in town that suddenly has a line around the block every single morning. It's the clothing brand you see all the kids wearing. It could even be some boring, obscure company that your own company uses, one that makes a critical part for a booming industry. These are the kinds of clues that the pros, sitting up in their ivory towers on Wall Street, they often miss them completely. When you boil it all down, Lynch's message is one of pure empowerment. It's all about using what you already know, your own observations, to find incredible investments. It's a call to be curious, to be patient, and to trust what you see in the real world over all the hype. So the real question is, what future 10-bagger is hiding in plain sight in your own life?